Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Bitcoin is still due to play out a major bull market on the larger time frames, but in the short term, Bitcoin is still consolidating sideways as the Bitcoin and crypto funding rates are getting very overheated right now. So this is something that we need to pay attention to, as the price of Bitcoin is now establishing a new area of resistance here in the short term. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, starting off on the monthly Bitcoin chart. So each one of these candles is one entire month of Bitcoin price action. So this basically is looking at over a decade worth of Bitcoin price action, going all the way back to 2011. So pretty much Bitcoin's entire price history. And this chart right here shows the US presidential elections happening roughly once every 4 years, as we can see. And the Bitcoin price, historically speaking, works in 4-year cycles, mainly to do with the 4-year Bitcoin halving cycle. The Bitcoin halvings happening roughly once every 4 years. But essentially, if we're looking at these US elections, we can see that the price of Bitcoin usually, basically every time throughout Bitcoin's history, plays out a major bull market, a bull run in the price of Bitcoin over the next 1 year approximately following the US elections. And so if we're taking a look at this first example, following the 2012 election, we saw a huge bull run over the next 6 months approximately, and then we saw a decent crash during basically the middle of that major bull market. And then later during 2013, we saw a continued bull run into a new all-time high. And if we're looking at the next example, the 2016 election, we saw a huge bull run in the price of Bitcoin, almost straight to the upside here on the monthly time frame over the next 1 year approximately, basically from the end of 2016 all the way to the end of 2017. We were in a major bull market in the price of Bitcoin. Of course, we did see little pullbacks along the way, but that was pretty much just a bull market almost straight to the upside with just minor pullbacks along the way. And if we're looking at the next example, of course, the 2020 election, we also saw a huge bull run in the price of Bitcoin over the next half a year approximately following the election. And then we saw a major crash during that bull market, very similar to what we saw back in 2013, and then a continued bull run later during the second half of 2021 up to a new all-time high. And so if history is any indication, we're still due to see a major bull market potentially over the next 1 year from now, basically. So all the way until late 2025, which means right now we're still in the early stages of this bull run. And so that's why I always say, no matter what happens on small time frames, of course, we can see little pullbacks and things like that on small time frames. But no matter what happens in the short term, if we're zooming out, looking at the bigger picture, ultimately, we're looking very, very bullish right now, basically in the middle of a major bull market. And if we're taking a look at this weekly Bitcoin chart, we're still playing out this bull market signal, which I've been covering a lot here on the channel. So this is still looking bullish, obviously. And the same with this weekly Bitcoin chart. We're still seeing a lot of bullish momentum here in the weekly Bitcoin MACD, and the last time we saw anything close to this was just over a year ago, last October in 2023, and we saw a huge bull run coming next over the next half a year approximately. So once again, we're still looking very bullish here on the larger time frames. And if we're taking a look at the 4-day time frame, this super trend indicator is still sitting in the green, indicating a larger bullish market. So if we're taking a look at this 3-day Bitcoin chart, we still have this 1618 Fibonacci extension sitting at around 94 to 95,000, which could be acting as a bit of resistance. So pay attention to that level as a possible price target and point of resistance at 94 to 95,000. But once we can see a confirmed breakout above around 95K, in that case, we'll likely head up towards around $102,000, which is this 1618 Fibonacci extension on this weekly Bitcoin chart. If you draw the Fibonacci retracement tool from the previous all-time high, the bull market all-time high from the last bull market of 69,000 down to the bear market bottom, this gives us the 1618 Fibonacci extension once again at around 102,000. And if we can break out above 102,000, then in that case, we also have this 2618 Fibonacci extension sitting at around $113,000 per Bitcoin. So 113K will likely come next after we first break out above 102,000, which will likely come after we first break out above around 94 to 95,000. And so there's still a lot of opportunity ahead of us here in the price of Bitcoin, especially on the larger timeframes, despite what happens here in the short term. And if you want to trade any of these moves to maximize your profits in crypto, personally, I take most of my trades over on Bybit, so I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link below this video to make your Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a 500 USDT position airdrop. So basically a free $500 trade as your first trade over on Bybit, but that's only available if you use the link below this video to make your Bybit account and actually deposit on that account. So if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there's also Bitfinex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitfinex, which means if you're in the US or the UK, for example, or another country where you might not be able to access Bybit, you can access Bitfinex. So I'll also leave a link to Bitfinex below this video. And if you use that link, you can get up to a 5.5k deposit bonus. And only if you use that link, you can get an exclusive 10% discount on all trading fees on the Bitfinex exchange forever. But that's only available if you use the link below this video to make your Bitfinex account. So there's another option out there other than Bybit, one that you can access from the US. Once again, there's Bitfinex links down below if you want to claim those extra bonuses. But with that being said, taking a look at the Bitcoin liquidation heat map, and just recently over the last 1 day or so, we saw a slight little move to the upside in the price of Bitcoin, and we actually wiped out a bit of liquidity that was sitting at around 92.3k approximately. So we took out that liquidity, and then we saw a little short-term rejection from some resistance that's gathering right here, which I'll talk about in just a moment. But for now, we still have some more liquidity sitting at around 92,500 and another level of liquidity at around 93,500 and quite a lot of liquidity closer towards around 94 to 95,000. And as for liquidity to the downside, we have a small amount that's sitting at around 88.7k and a decent amount starting to build at around 86,000 to 86,500 and also a decent amount closer towards 85,000. And in case you're new to this channel, usually the price of Bitcoin, not always, but usually the price of Bitcoin likes to move towards where there's a lot of liquidity. As we just saw recently, usually the price gets attracted towards these major levels of liquidity. And oftentimes, if there's a significant area of liquidity, if for example, it's above the price and we wipe out that liquidity, that can cause a short squeeze. And in the other direction, it would be a long squeeze. But with that being said, if we're taking a look at the Bitcoin and crypto funding rates, right now the funding rates are very much overheated, which is a possible warning signal telling us that we're due to see a bit more of a short-term cool-off. So basically a slowdown in the short term from all of that crazy bullish price action that we saw over the last 1 to 2 weeks. Because essentially the neutral funding rate, the funding rate, if everything was just neutral right now across the derivatives market, would be 0.01%. But we can clearly see right now that pretty much all of these funding rates for a lot of these top cryptos across pretty much all of these exchanges are well above 0.01%. And so this essentially means there's currently a massive demand to long Bitcoin or long crypto right now, and not many people really interested in shorting Bitcoin or shorting crypto. And so due to that, these high funding rates makes it more expensive to basically hold or maintain a long position, and not as expensive, at least in terms of the fees, to hold or maintain a short position, because when the funding rates are positive, and especially this high up, the short positions basically earn those funding rates as fees whenever the funding rates are positive, and the long positions are paying these funding rates as fees. But sometimes we do end up seeing the funding rates actually go negative, and that's basically the opposite when short positions have to pay the funding rates if they're negative, and the long positions earn those funding rates. They earn fees if the funding rates are negative. And so that's essentially what the funding rates actually mean and what they do. And once again, if they're this overheated, it usually tells us that we're due to see at least a little bit more of a cool off from all of this bullish price action before basically continuing the bull market higher later on. Because once again, if we're zooming out, looking at the bigger picture, things are still looking very, very bullish right now. It's just perfectly normal to see these little cool offs along the way during the larger bull market in order to reset some of these things like the funding rates. But with that being said, if we're we're taking a look at this 2-hour Bitcoin chart, we can see just recently over the last half a day or so, we actually broke out above this descending line of resistance, at least on the 2-hour time frame, and that was sitting at around 91,000 approximately. And then we've actually just broken back below that point of the breakout, back below this line on the price chart, which technically invalidates the breakout to the upside and invalidates this pattern, at least on the 2-hour time frame, because anytime where we break out and then break back on the other side of that line, that's an invalidation signal to invalidate the pattern. But if we're taking a look at this pattern on the 6-hour time frame, we're still possibly forming a symmetrical triangle pattern, also known as a horizontal triangle pattern. But either way, whether you think this pattern is completely invalidated, which it is if you're looking at the 2-hour time frame, or whether you think we're still actually forming this pattern on the 6-hour time frame, which could be the case, either way, we're simply just consolidating sideways, cooling off a little bit in the short term after that crazy bull run that we saw over the last 1 or 2 weeks, before potentially building up, getting ready for that next major leg to the upside, the next major bull run. Because once again, right now the funding rates are very overheated, so it's very normal to see a little bit of a cool off in the short term to reset some of those things like the funding rates. And if we're taking a look at this 2-hour Bitcoin chart right here, we can see that the price of Bitcoin is establishing a new area of resistance, at least in the short term. So basically, this is the area on the price chart in the short term where a lot of traders are interested in taking profits or selling a bit of Bitcoin, and this is sitting in between around 91,500 to 92,500. So in that 1k price range, once again, we should expect a decent amount of selling pressure and the price to struggle in this price range, as we've seen recently. But the good news, at least as of recording this video, the price of Bitcoin is still currently forming higher lows, which basically tells us there's an increasing demand for Bitcoin. So right now, the sell pressure or the resistance is basically staying the same. We have a constant sell pressure at this area on the chart, but an increasing buying pressure, an increasing amount of people that are bullish wanting to buy Bitcoin. And so if this simply continues, the increasing demand will ultimately buy up all of the sellers in this price range, which will ultimately cause a breakout at some point later on if this continues. So this is some good news here, continuing to see higher lows on the Bitcoin price chart. Once again, that is good news, and very soon, if this continues, potentially in the coming days, maybe in a week from now, but very soon, we're likely going to see a breakout here and another leg to the upside in the bull market. Because remember, when we're zooming out on the larger time frames, things are looking very, very bullish right now. And if you want to trade these moves in the price of any crypto, once again, check out those links down below this video to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or shorts positions. And the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.